Eyeing tax reform, a real estate tax break, the 1031 exchange could be on the chopping block to pay for tax cuts, and that tax break is widely used by the commercial real estate industry. Sam Zell is with us right now, and we want to talk about tax reform. What are your thoughts, Sam, in terms of what they're talking about?
Well, they're talking about changing a very major rule that affects real estate decisions on an ongoing basis. Right now, if I have a property that I've owned for a very long time and I have a very low tax basis, there's no incentive for me to sell it. The only reason there was an incentive ever was if I could use a 1031 exchange and defer the tax till I deal with another property. You want to change the rule? That's fine. I mean, there's lots of rules we have. I mean, we're going to change, the tax rate. But I think that there's a missing piece here because I don't think people are taking into consideration the role that 1031s play in the normal give and take of real estate activity.
Make the case. Why?
Well, because, in effect, what it would amount to is if I had a very low basis property, I'd never sell it.
Right.
Okay? I'd just never sell it. And one of the things that makes our system work is that people are incentivized to sell and turn over and change ownership. And that's very healthy for our economy.
Yeah, and that allows other people into the market.
Healthy for our real estate industry.
Yeah.
Yep.
So in terms of overall tax reform, I want to get your guys' take on this. What they're talking about right now, lowering the tax, collapsing the number of brackets. The deductions are obviously the big debate going on in Congress right now. What would be most important, do you think, in terms of moving the needle on economic growth that they need to do in tax reform?
Well, I think there's a long list of things that could be done. I particularly think that the idea of eliminating the tax deductibility of local, state, and taxes is a really big thing. I think that there's been, I think that structure has incentivized states to generate taxes that might not be required or might not be the best answer because, after all, the feds are paying for half of it or the feds are paying for 60% of it. I don't think that's healthy tax policy, and I think it's a long time needed to change it.
Is that going to punish certain earners, like in New York and California? There are some people who feel that...
it's going to create a lot of additional discipline for New York and California and Illinois and Connecticut.
What do you mean discipline? What do you mean?
Well, in other words, if I'm a legislator in Illinois and I want to pass a tax that, let's say, increases the income tax 2%, I say to myself, well, federal government is paying for half of it, so it's only 1%. Okay? So I have a partner in the deal.
Yeah, yeah.
We ought to take the partners out of the deal. We ought to say, you want to charge your people more, then they should pay the full benefit or burden of what you want to do so that they can intelligently assess whether that's good policy.
Yeah.